Welcome to AM Best Audio.
The U.S. property casualty industry recorded a $61 billion underwriting gain in 2025, up significantly from $22 billion recorded in 2024. Here to discuss AM Best's first look report on full-year property casualty results for 2025 is David Blades, Associate Director, Industry Research and Analytics, AM Best. And David, property casualty insurers nearly tripled their underwriting gains from the previous year. Seems like a big number. Is that a surprise?
So, John, honestly, it wasn't a surprise. I think when you look at the momentum that we saw in terms of the results from 2023 into 2024, and that momentum, what we saw was that continuing in 2025. Particularly for two lead lines of personal lines of business, homeowners and private passenger auto, which make up about 45, almost 50% of the overall PC market. Those lines had a lot of positive momentum coming into the year and continued that momentum in 2025. So again, it wasn't a surprise as far as that's concerned. And honestly, in the first quarter of last year, we kind of projected improved underwriting results. Again, continuing that momentum from those two lines and other lines, we foresaw that coming in 2025. Really, the results were manifestation of continued disciplined underwriting, and that includes just risk selection and companies really sticking to risk appetite and enterprise risk management principles. And again, like I said, disciplined underwriting from that standpoint. Also, from a rate increase standpoint, there was a lot of rate momentum in certain lines of business, that for years needed premium adequacy or better premium adequacy. And so we saw companies sticking to that, and they more judiciously used their pricing tools as well in 2025. The year started off obviously with the California wildfires, but despite the losses from California wildfires and even secondary peril losses, hailstorms and severe convective storms that affected certain states and certain regions, the benign Atlantic hurricane season with no, hurricanes making landfall in the U.S., that also helped in terms of the overall underwriting results in 2025. So you put those factors together, again, they were enough to offset some of the headwinds from rising claim severity and just some of the macroeconomic issues that are impacting insurers. And, some of the things that we saw from the standpoint of less favorable reserve development, in particular impacting the workers' compensation line, which has long been, of the major lines of business, it's long been the most profitable and the most consistent for the PC line. So, what we saw in 2025 was building together those positive factors, being able to outweigh those headwinds.
So the segment saw spikes in surplus, in premiums earned, and investment income. Where does that tell you where the industry is?
So looking at those individually, all right, so premiums earned, like I said, there was a lot of rate momentum, in particular on private passenger auto and homeowners, pushing those lines and definitely seeing improved underwriting margin in those lines, and also in commercial property as well. So the rate increases and the more judicious use of pricing tools that helped from the standpoint of premium adequacy, that definitely had an impact on earned premiums. With regards to investment income, the double-digit year-over-year increase in investment income, that really reflected favorable, equity market conditions, and it also favored or it also reflected, companies really being able to take the proceeds from maturing investments and reinvesting them in higher yielding instruments. So that benefit helped them on that side. So you have the better underwriting margins and also the investment income that combined to create better pre-tax operating earnings. So we saw those particular factors. And then from a surplus standpoint, again, with the better investment, overall investment environment, that also helps from the standpoint of generating realized capital gains. So you combine that with the investment income, and the fundamentally, companies or insurance companies are always going to look to focusing on underwriting to generate the underwriting margins. So you have the underwriting margins, better investment income, and realized capital gains from the favorable investment environment. That helped generate the better year-over-year surplus. So that's what we saw being the factors for those.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
Thanks.
Now, here we are at the end of the first quarter. Is this a trend that we should expect to see continue?
So I think definitely coming into this year, we definitely think we're going to see continued rate momentum in certain lines of coverage. However, like I mentioned, the commercial property, even private passenger auto and homeowners, we expect those rate increases and that rate momentum to moderate this year. So we might see the constriction of some profit margins in 2026. So even though results may continue to be favorable, the margins may constrict. So we expect that we probably going to see that. Again, I think the performance of certain lines of business in 2026, again, because of some of the factors, with regards to dissipating reserve cushions, we think that may have some impact on lines like medical professional liability. And like I said, continuing to see a profit margin shrinkage in workers' comp. That's something that we're really going to keep our eyes on in terms of what we're looking for that's going to ultimately impact 2026 results. Obviously, in the first quarter, we had Winter Storm Fern, where when we get a chance to aggregate first quarter results, we expect there to be some impact on first quarter profitability for PC companies. Whether that impact is going to be something that's material enough to affect the full year results, that's something that remains to be seen. But again, we'll get a chance to aggregate that information once we get through the first quarter and get all those statements in. So there are definite headwinds. We're still dealing with the impacts of social inflation, third-party litigation funding. Like I said, the diminishing reserve cushions on certain lines. So those are some factors, and just the general potential for global macroeconomic factors. With the geopolitical tensions, what we're dealing with in Iran right now, there may be factors that aren't as prevalent right now that through the remainder of the year could impact results. So we'll continue looking at them, but there are some fundamental positives to build on that we could think are going to continue through for the PC market, and we'll keep an eye on all of those, and including what's changing. We'll keep an eye on those throughout the year.
Thanks, David.
You're welcome, John.
That was David Blades, Associate Director, Industry Research and Analytics for AM Best. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.